All right, so Facebook right here on the daily. Switch over to the daily chart. So we got some resistance up here at the top. So first thing you want to go ahead and do, right, is draw your horizontal line up here. We know that 384. You have a double top right up here. 1, 2 candles. That's your double top right there. Then over here, you're gonna draw your downtrend line right here. The horizontal line, right here. Oops, wrong line. So right there, and then right here as well. Right there. Now you can clearly see, this one right here, we had a little descending triangle right here, and it came down and broke through this triangle right here. It was in the downtrend, but it came down here and bounced off the 200 EMA, and then pushed back up a little bit. Now it's back down to just 200 EMA. So this has really, really strong support right down here at this area, 320 area right here, 323, 322, really strong support here for Facebook. So last time Facebook came down here, I took a call for the 345, and that one went up, over 100%, right? The call expired on November 5th. So even right now, there's still a lot of time, but it's a good thing we sold because, when Snap failed their earnings, or actually didn't fail their earnings, but, with the whole Apple privacy thing, Snapchat brought down Facebook and all the tech stocks. So right here, so how you find your resistances. We have resistance right here in this double top. So when you find your resistance, go ahead and draw your horizontal line, right? There's resistance right there. So when the stock, decides to start going up, you look for a candle like this, right? A bullish engulfing candle. You're trying to look for a candle like this. We know that there is also some resistance right here as well at 337, right? This double bottom right here. So double top resistance, and also your double bottom right here is going to be resistance. Your double bottom at one point was support, but now since we're going back up, it's going to be resistance. It's going to run a resistance right here. So Facebook, once we get above this downtrend line right here at 330, we're looking for this to fill the gap back up to 337, and then may get rejected right here for a little bit, and then push back up to 340, around 343 into this resistance, and then eventually get over this 200 EMA, this 50 EMA right here, and then push up towards this gap. Or right here, we have resistance. So let's go ahead and draw the resistances first. So we have some resistance right here. 1, 2, 3 candles at the same height, right? So that's that's a triple top right there, right? So that is resistance. Then our next resistance is going to be right here. So just look at the candles to your left. That's how you find your gaps, right? And then you're going to run into some right here as well. So right there, so this is how you find your price target. Once we start get above this downtrend line right here, and start to push up to from 330 to 337, you could take profit right here. That's a good move. That's a $7 move. That's going to give you a lot of profit. Then you take profit here, and if you want to re-enter a call, your next profit is going to be at 343. Then after 343, it's around 350, then 355, then 360. And 371, and then all-time high of 384. But we're not going to touch this one until earnings actually comes out on the 29th or the 27th. Let's see here. 29th or 27th.
On Wednesday. They'll be on Wednesday coming.
Yeah. Hold on one second. I have one person messaging me in Discord. Yeah, so we're not gonna play this one until after earnings. So if it, hopefully, you know, their earnings are good and it kind of lifts the market back up, or it kind of stays flat, so we could take some calls all the way out in mid-November, towards the end of November, for this to push back up towards 350 area. Those are going to be good calls. So in one mind, I would like for this to push back up, and then I would not want it to push back up, so that way we could play the calls. But if it doesn't, then it could bring the market down. I definitely want the market to go down. You kind of see when the market is bullish, right? You can make a lot of money because there's a lot of money pouring in. Penny stocks are going crazy. Just like PHUN and DWAC, you know, we only saw those two stocks on Friday, but if you looked, there was a bunch of other stocks running. There were plenty, like a lot of penny stocks. You had MARK going from below $1 to almost $3. You had BE&E, SGBX, another one went up almost 200%. So, you know, a lot of money that was pouring in on Friday and Thursday. Next one we're gonna go ahead and take a look at is AMD. You know, AMD, this one, when it moves, it can make you a lot of money too. A lot of people love this stock, AMD, right? People really love this one. And this chart is really bullish. This is textbook right here. So on the daily chart, you're gonna go ahead and find your peak up here, right? Draw your trend line coming down. You go ahead, touch the top of that wick right there. And then to get your triangle, you know, right here, you can clearly see your triangle right there. That's your symmetrical triangle. Yeah, as soon as you saw the stock was bouncing right here, just go ahead, draw your line right here, touch the bottom of the candle. You see you had this bullish inside candle right here, right, on the daily, up here from 100 up to 104, and then, you know, we're kind of pushed up into above these EMAs right here, and push up to 107. It kind of held here on top of the 25 EMA, the 10 EMA, and then, you know, just did this thing right here and rode the 10 EMA. Now we're still riding this 10 EMA all the way up, and closed with a red candle right here on Friday, but this is not a big deal. All right, you closed all the way up here. You just need for this to hold up here at 118, and then, you know, it's going to push over this all-time high of 122.49. So, so this one, if you're in AMD, or if you're looking to play calls in AMD, this one is definitely a good one to be watching, keep an eye on. Now we're going to go ahead and draw this line right here. All right, so that right there is going to be our channel line going up right here. All right, so right there, that is our channel. So this is what we need to stay inside of. Stay inside of this channel, form another green candle here, then push higher. And eventually it's going to fall outside of the channel. But as you can see, once we get over this all-time high, if it falls outside of the channel and kind of come back down here, this all-time high is going to be support. Now we're going to fall, right? And then eventually the stock is going to push higher. So right there on that channel on the daily. So just like we have this triangle over here, right? We had a previous triangle where it failed right here, right? Right up in here. You see where it failed in here, right? It was inside of this triangle right here, and it failed and fell down. But it didn't fail in this triangle right here. So AMD, if you're gonna watch this one, you know, take calls over 120. I would wait for the all-time high, 122.50. I wouldn't take any more calls now until it gets over this high right here. It closed at 119.98 on Friday. So yeah, I would just wait for 122.50 to take calls.
Question.
Yes.
Now, when it gets above that peak resistance, it's all-time high. It's all clear blue sky, as they say, right?
Mm-hmm.
Now, how do you know what the next target might be?
125. You're gonna run into resistance, huge resistance at 125. So whenever a stock like this is pushing up in the 120s, 130s, every $5 you're gonna run into some tough resistance. So 120, 125, 130, 135, 145, 150, and so on and so forth. Every $5. And after it gets over that $5 mark, you're looking for it to push to 130. So if this one, if it doesn't keep breaking out, it could come back down and it would retest, around 114, somewhere around here. We have some support at 114.50, right around here. Yeah, some support. This line right here is going to act as your support, right? This candle right here, and you can see this candle lines up with this candle right here. When we pushed up here and it pulled back, it bounced from this candle right here. So you go ahead, draw your horizontal line right on top of that candle right there. So if it doesn't push up and keep going higher, it could come down and retest this line at 114.50-ish, somewhere around there. Now, let's go back to Facebook just a little bit. So, what was that?
No, I'm sorry, Dre. Question. It doesn't seem this is from Friday. It doesn't seem to be too much volume. I don't know. Maybe it's wrong. Huh?
I see you're breaking up. Sorry.
Oh no, I'm sorry. I probably am because unfortunately right now I'm on my cell phone. But it doesn't seem to be too much volume to support this run up. What happened here?
I think I mean you're right. If you look at the volume is kind of light. But as the market pulled back right down here and it came down to 100, right? You could see this was already coming up towards all-time high when the SPY was above all-time high. So it's gonna move with the SPY. So even though the volume is light, that's because the market itself is pushing higher. So it's not buying pressure from actual retail traders out there. This is algorithm. A lot of this is algorithm just pulling the stock up with the market.
Okay.
Yeah. So that's why you see the volume is a little bit lighter because look over here, right? You see how much volume it took for this to break out over here, and then you see right here, right? Exactly. So, yep, that's just algorithm pushing it up with the market. Because if you take a look at NVIDIA as well, right? NVIDIA, kind of the same thing, right? NVIDIA, you saw a lot of volume over here, and then we had a high over here of 230.64. So go ahead and draw our horizontal line right here. Now you can see when the SPY pushed up to all-time high, NVIDIA, when we're at all-time high before, sold off all the way down here to 197, and then the SPY pushed up to an all-time high. So NVIDIA kind of followed it. The FANG stocks, the other tech stocks are going to kind of follow the SPY, and then you saw it went up all-time high with really low volume compared to over here when we pushed up from 190 to an all-time high. So that's all algorithm right here. About 70 to 80% of the market is traded by algorithm, right? So it's not, that's why you see stocks like AMC, GME, right? They're not, a lot of people have a lot of theories out there saying, these stocks are trading at this price, 5,000, some stories I've heard they're trading at 5,000 on the dark pool or whatever. People are just talking stuff that doesn't make any sense. So the stock market is traded by algorithm. What algorithm does is, this has been going on for years. It's not just now. The algorithm is designed to reward companies with good EPS and good revenue. So that's why any amount of buying pressure that you see that's going to come into AMC and GME, it will probably move up, $5-10, but the algorithm is designed to hold those ticker symbols back. Everything is plugged in. So if the company is not having good revenue or good EPS or good forward outlook, it's not going to move. That's just how it is. So the other thing a lot of people don't, you hear talking about, and they don't know a lot of stuff about, is shorting. When you short a stock, right? If you borrow 5 million shares today and you short it today and you cover that 5 million shares, it goes right back in your inventory. You do not have to borrow the shares again. You can reach out to your broker and say, hey, I want to hold these shares overnight. And they'll say, okay, this is the fee. And you accept the fee. You hold that 5 million shares and you rinse and repeat as many times as you want. So, that's how shorting works. There's no amount of days till you have to cover. I've shorted for weeks and my broker has never said, hey, you need to return these shares. So there's a lot of misconception out there. A lot of people are doing it just for YouTube views and stuff, but they actually don't, they've never actually shorted a stock and then they don't really know how it works. So don't get caught up in, the whole short stuff and short squeeze stuff and hold, and you end up holding and losing all your money. Just like DWSE, that's why I'm telling you, this thing is going to come right back down. This company has no revenue, no nothing as yet. It's not even, a real company yet. They haven't merged or anything with a company, and it's up to $175. It's going to come right back down. Don't be the one buying up here and then blow your account up.
Yeah, question, Paco.
Yeah.
So I had borrowed 100 shares of DWAC on I think it was Thursday, and the next day, did they return those shares back to the locates to the broker the next day?
You have to. So if you borrow it today, before the day closes, you can message TradeZero and say, hey, I want to keep my locate overnight, because the only way you can keep it overnight is if you are currently in the short position, you don't cover before the end of the day.
Gotcha.
Yeah, or then you're going to be able to hold it automatically overnight.
Okay, makes sense.
At the end of the day, they go back to inventory, and you can actually get money back from your short shares. So if you shorted, 1,000 shares and you covered, and you still have that 1,000 shares in your inventory, you can actually go to give back the shares to TradeZero early, and you'll get money back. So there's a lot of things people don't know about shorting, right? You get money back for the shares when you return them early.
Very cool.
Yep. So, that's what I'm saying. DWC, don't be the one that bought up here, because there's a lot of hype. Of course, there's a lot of hype because it's Donald Trump's name, right? But it's going to come right back down. Donald Trump does not control the stock market. It's going to come right back down.
So we're probably going to see a situation with DWAC like we saw with SPRT, right?
Yep, pretty much the same thing you're going to see.
Okay.
Then you're going to have a lot of people saying, hold, this is going, I'm seeing people saying today, hold, this is going to 200 tomorrow. We're going to find out tomorrow. But, that's why I'm here to guide everyone. Just don't be the person that buys up there that bought at 20 and then it goes up to 170, you didn't sell. You're going to hold it for more. Like, definitely don't do that. So which one? Let's take a look at, go back to Facebook really quick. So Facebook, one thing I forgot to point out is we have the, this 200 EMA right here. If we start breaking below this area right here, and then, this 317 bottom, this thing doesn't really have any support until all the way down here at 300. We're going to run into some support at 300. So once it starts breaking down, it definitely has room to fall down to 300 right here at this candle right here, right? You can clearly see from here, there's really no support until we get, maybe right here, you have some, at 316, you have a little bit of support, but then it can go all the way down to 320 before you actually get a bounce. So if they miss earnings, they're going to go down to at least 300. I doubt that Facebook is going to miss earnings though. Let's take a look at Affirm. This one Affirm is, the stock is an absolute beast. Like if you got into calls on this one, we played it for earnings. We did make a good bit of money from that one. So a firm, really, really ugly chart when you look at it. Right, we have this gap up from earnings right here. See all these gaps right here. So we're going to go ahead, draw these little trend lines right here. You got that little one right there where we broke out. And also right here, you know, these are where you would take your entries if you're looking at the daily chart. Once you kind of see it starting to break these lines right here with this bullish engulfing candles when you're looking at the daily, right? Because this right here, you know, this is our little flag right here, right? Got a little flag right here. You see it starting to push up here and it's still riding on this 10 EMA right here. You're going to take calls right here. You could take calls when it breaks over this resistance right here at 133. And you can see just moving from 133. I mean, sorry, not 133, 121, all the way up to, you know, a high of 130. You have your option for a couple of days. You can make good money right there. Same thing right here. This is all the stuff that this is stuff that you look for when you're charting on the daily, right? You just come ahead, you just go ahead and draw that line right there. You have this massive bullish engulfing candle on the daily, right? And then we got back up and started riding this 10 EMA, and then you just see this thing decided to go up to 160. And look at it, right? If you look at that chart, this is super bullish still because we're up here still holding up well, right? So you just need one outside candle right here, a green candle, and then, you know, your calls would be over 160, 160.69. Or you can wait for 161 to take calls. Once you start breaking over this 160.69, you don't have to take calls or far out. You could do a lotto play, a same day play, if the option chain allow it, and you can make a ton of money because once you break this resistance, you know, it could go up 165 or even 170 at the end of the day. Now we could go ahead and draw our little channel. You guys see the channel in this one, right? A little channel right there. So now if you were watching this stock, right, before, actually, let's put this line, let's put that line right there. If you were watching this stock all along, right, and you saw this happen right here, you would have already drawn this line right here to touch the top of this candle right here without this piece of the puzzle happening right here. And now when you extend this line all the way up, you clearly see where you're going to take profit because now it trades here, and then it comes and it hits this trend line right here. So this is your resistance. So if you were in here as a trader, this is where you're going to take your profit because you're hitting resistance and you don't know if you're going to fall back down. Now we're going to go ahead, draw this lower channel right there. So that's how you create your channels, right? So that needs to stay inside of this channel right here. If it falls down, your channel tells you if it breaks this 10 EMA, this 10 EMA is your support, right? Then you have this 25 EMA down here. Now, if we start breaking all of these EMA, then this channel line right here, this trend line, is going to be your support. You're going to look for it to hold on here and then trade back up and push back up. So that's it for a firm chart. This chart is really not much. Then you can go ahead and draw a this line right here. Now this is where you're going to get your ascendant triangle right here. All right. So now the peak of this triangle is where it should reject once it starts to. Let's extend this line all the way up in here. Okay. Right. This is where it should reject. So it has room to stay in here and then push up to at least 175 max, right? Before it starts to reject, and then it'll come back down. And then this 160.69 is going to act as the next support, and it's going to trade sideways and hopefully trade sideways to the right and stay inside of this channel and then push higher. So that's how you want to trade this and watch it for a while. Now, if you look at SPY kind of has
Yeah, Andrew, before you move on to SPY, this is still a firm, right? Or you on SPY already?
Oh, no, I could go back to the firm.
Yeah. Okay, so as it is right now, right? if you're looking at a firm right now, what would be your decision? Not play it or wait for some sort of a direction, or what would you do with it right now?
No, you can actually, you can play it, but play it when you get above that high. Let's go back. Where did it go? Affirm is gonna be on my watch list, so. Affirm, you can play it when we get above here, 160.69. Do not play it unless it gets above here, because there's too much uncertainty right here. When you're here, you crack this this triangle coming down, and then your next support is at 147. 150 is going to be your psychological support. Then you have 150 on the 10 EMA right here. So it could fall down. So don't touch it until it breaks the high. Does that make sense? If you look, you kind of have this little
You
mini
don't touch it.
channel.
If it starts to it breaks your triangle line. What do you do with it? Do you let it fall? Or don't touch it, don't chase it, or nothing?
You mean if it breaks up here?
Yeah, like if it breaks,
It's not going to break this ascending
No,
triangle
like-
right here.
no, if it's falling, right? If it's falling, it would break it, right?
Yeah, if it's
channel.
falling, take puts below 150, because the next support is around 145, right around here. You have support at 145, right here.
Okay.
So puts under 50, but calls over 160.69. So you have to
Okay.
give it room to come down, because now inside we have this inside channel right here. You can see this inside channel is support. It's bouncing on this inside channel right here. So you have this bigger channel, then you have this inside channel right here. Then you have your ascending triangle right here, which is the peak of where it's going to get rejected right here. So this is where you take profit up in the 170s before it gets too extended. Affirm, our size usually gets up to like 69. And over here, you can kind of see it came up to 80 before it gets rejected. So it still has room to push up. It could push up some more.
Okay. So what do you look
Is
at
there ever-
time frame? What do you think in terms of timing? A week, 2 weeks before it gets up there?
No, I mean, with how this thing moves, this thing is moving every single day. So, you have to watch it every day. This stock, there's not a day that it hasn't, dropped about $3 or $4 or pushed up $5, $4, $3 or $4, $5, right? Every single day, this thing is moving.
Okay.
Yeah, because there are a lot of people out there that are interested. I think someone else was coming on as well that had a question.
Just a quick question. Is there ever a time in this original channel you drew, is there ever a time where the channel, the top and bottom is just really too wide, where you would not play it? And maybe in this case, because again, with the firm, I see the channel within the channel, but I also see where it did have some support at that 25 EMA and potentially may drop back down to it.
Yeah, exactly. Because, once you start breaking the support right here, it has a lot of room down to 133, right? It could come down to 133. So safe, that's why you have to look at the safe play would be over 160.69, right? Over that high, because that's going to tell you there's still a lot of buyers interested in pushing the stock higher. But now once you start breaking this, this 10 EMA at 150, 150 is that psychological level. When it breaks below it, you're looking for it to drop down to 145. Now it has strong support at 145 right here. And then after 145 drops, you really don't have any strong support until 133 down here on the 25 EMA. So downside, if you see it start breaking here, you could do some long puts or maybe 2 weeks out, right? Because this thing kind of shot up and it never really came back down and kind of consolidated to kind of do anything. So, well, if you look on the bigger picture, kind of zoom out, what do you guys see right there? A pattern that we're looking at right there.
Potential couple.
Well, it's right at earnings. the last time it got up high, it shot up high over to the left.
Yeah. But when you look right here on this daily, this had a massive cup and handle, right? This is your big cup right here. And we came up in here, and this is right where we had this handle right here. And then this is where we took off, right? And the cup and handle, because your cup and handle is your bullish formation. So it's a big U coming down, which is like your teacup, right? Then right here is your handle, and then it pushed up higher. So as a trader, if you were looking at this, that was the pattern that you would have seen. And you say, hey man, I'm gonna take some calls right in here. That's why a lot of traders out there, they saw this pattern right here. They saw the handle, and then you see the volume came in, and then the cup, pushed all the way back, pushed it from 111 up to 160. Did you get in on it, Keenan, after you and I spoke?
No, I didn't. I didn't.
I kind of hope that you did, because when we spoke, it was at 145.
Right.
Yeah, but it happens. But yeah, firm, puts below 150, then you can take your first price target around 147.50. A $2, $2.50 drop, a $3 drop. Your puts are gonna print, right? You don't really need more than that. So it depends on how many contracts you have. Just go ahead and take some profit. And then underneath 140, around 145, it could drop down to 140. And before it kind of starts bouncing, and kind of maybe form some kind of support down here on this 25 EMA, which is all the way down at 130, but it may start forming some support in here. Buyers may come back in and push it up once we get down to 140. I don't think it's going to go below 140 anytime soon, only if the market goes red. I think 145, it will probably drop before it rebounds. It has strong support at 145, really, really strong support. Let's see here. What can we take a look at? The beast, Tesla. All right, let's take a look at Tesla. This chart is definitely something else. You can see a massive cup trying to form on Tesla. That is a cup that you're looking at right there. Right. So this thing, huge cup forming. We just need a handle for this thing to push higher. You may get a handle start forming somewhere up here, and then this thing decides to take off. So, Tesla, no resistance, overhead. This thing, all-time high, right? 910. With how this one moves, you might as well, if you want to take long-term calls, start looking for calls, up into 1,000 and above, because this one is going to move once it, it starts pushing. It's going to go up towards $1,000. Only thing I'm worried about is this daily RSI. Look at this, right? 83. This is high. Last time we had an RSI over here at 80 of this 83 area, right? It sold off from 905 all the way down to 567. So the RSI is a little up there. But other than that, Tesla's chart is really, really not much to chart on Tesla's chart other than, this horizontal line right here. It already broke out of the triangles that it had. And then, right there, right? You had that all-time high right there. And it's still closed with a massive, you had this massive bullish engulfing candle. And then you have this green bar here, close with a green bar. So nothing really bearish about Tesla right now. MACD still crossed over, so this one, average volume, you can kind of see volume is still there, right there. So keep an eye on Tesla. You can take calls over 910, because once we get over this 910 resistance, it may rip up to 915, 920. And once you get over 920, you take calls all the way up, and then this thing is just going to keep going. We can go ahead and we can start drawing our trend line right here at the bottom, right here, right there, right? Now we get inside of this, wedge right here, right? So already breaking out of the wedge right there. So it could come back down and then kind of stay inside of the wedge and stay sideways for a long time and then push higher. But I doubt that's going to be the case. I think it's going to go higher. What else can we look at? I think
You're off to the SPY.
There was a question. There was a question in the chat.
Question. Okay, QQQ. So QQQ, that one's probably going to mirror the SPY. Probably looks identical to the SPY. Yep. Same, pretty much the same chart as the SPY. You're going to go ahead over here, draw your horizontal line right there. Now we see, our channel that it was in. Go ahead and draw your channel line from right here, right there. That is your channel right there. You can clearly see where it came down, right? So right here, this was a perfect place to enter calls at 352 when it came down on this channel line right here. Now remember, before all of this happened right here, your channel line would have already been running across. So you knew by looking at this that you could have entered calls right here because it came down and it found support on the channel at 350. And if you look to the left, that support lines up with this candle right here to the left. That's how you know you're bouncing on support. You have support right here. Then you have your channel on the other side. So, I'm always going to draw these lines in every Zoom that we do. It doesn't matter if it gets repetitive because this is how you learn to chart. Right here, we have our channel right here, QQQ, right there. You see right here, we broke out of the channel, but market was pushing up way too soon back then, and we came back down inside the channel and then traded inside the channel and got rejected right here in the channel. Now it's trying to trade sideways, and then, eventually it's going to push higher. So you can see how the market pushes higher when the stock is inside of the channel. This was the top of the channel previously, right? This was the top previously. Then this was the top previously right here. Now, this is going to push up, and then we're going to get up to maybe, almost 400 right before we reach a top. And then you're going to see the same thing happen that happened here, where it came down and bounced, came down and bounced, came down and bounced. And this is how the market is going to keep pushing higher and higher. It's going to, up, down, up, down, up, down, and keep going higher and higher. Unless you have a recession, the market's not going to keep coming down. You have something crazy happen. Even though there's inflation talks, it's not going to really pull down the market that hard. May pull it down a little bit, but not that hard. Let's take a look at NVIDIA. This one, I like NVIDIA as a stock. Sometimes I get it wrong, but when it moves, it can really move. A lot of people love this stock right here. Zoom in a little bit right here. You can go ahead and you can see where your trend is forming right here. You go ahead, draw your little line right there, right? Now you see exactly what we need to break out of this little ascending wedge. Remember how you know that it is a wedge other than a triangle is your wedge is going to have a flat line across the top or a flat line across the bottom. That's how you know that it's a wedge, right? So now we're in this ascending wedge right here, ascending because we're pushing up. Now if we were descending, it would be the opposite. You'd have the line at the bottom and the line running down from the top. So NVIDIA, to be safe, again, you want to take calls when we break above this all-time high of 231.30. We had calls on this one, and I think those calls went really profitable Friday because it pushed up to 231, and I was on Zoom, so I forgot to say, hey, go ahead and take profit. I don't know if anyone actually took profit, but I still think we're good. I still think the market may push up higher by Friday or push back into where it was by Friday for that 231 area. Microsoft is another one that we have that's been doing really well. This stock, absolutely, this one's a beast, right? So, go ahead, draw your horizontal line. First thing you want to do is your horizontal line. Then we could go ahead and start looking at our channel, right? You can see the channel right there. Just look at that line going up, right? So go ahead right there. That's how you draw your channels right there. All right, so this one, you know, didn't hit the top of the channel, right? Still has room up to, you know, 320. Could go all the way up to 320. Get your horizontal line, your channel line right here at the bottom. Right there, right? So we know that it can, you know, this is why, you know, when we played Microsoft, right? You had really strong support right here at 280 and it wasn't breaking, right? So we knew that if it broke below this 280 right here, it had room down to, you know, 273 to touch this channel right here. But when I saw that we had a really strong support here at 280, that's when we entered calls, right? You know, those calls went crazy. We got in down here at, you know, 283, 284, and this thing pushed up to, you know, 307, 308. So that was a really good one. You go ahead, draw your line right here, right? So, you know, need to kind of stay inside of here and break this triangle, but I don't see it breaking this and pushing higher. I see it trading outside of this triangle and trading sideways and then push sideways like this. Because if it breaks higher and push here, this thing is just gonna go, you know, it's gonna go parabolic. It needs to stay inside of the channel and grind sideways and then grind inside of the channel. Maybe come up here to 325, reject, come back down to 310, and then kind of do the same thing and then keep staying inside of the channel. You can see it's been in the channel forever, right? Up, down, up, down, up, down, up, down. Same thing you want to see happening. These stocks are, you know, they're going to push higher. When you kind of look at them overall, they're going to keep pushing higher and higher. Let's take a look at Target. You know, we played Target once in this group and I kind of forgot about Target. And, you know, this thing dropped all the way down to 220 when the market went red. And it was on my, my watches, my personal watches. I had Target down here at 220 and I forgot about it. And, you know, it pushed back up all the way up to, you know, 250. That would have been a good, and calls are so cheap on Target. It was, you know, it was crazy. So right here is where you would have entered calls, right? So just go on the daily, not very, very hard. Go on the daily, right? Draw your line coming down right here, touch it on top of this wick right there. You know, this is always gonna happen with all these stocks. They're gonna fall down, then they're gonna try and push back up to get above the downtrend, then they're gonna get rejected and come back down. Now, once you see it gets rejected here, and then starts to push up, look for a massive bullish, you know, candle, right? Look for volume. Look at the volume down here. Volume came in, right? Look for volume. Look for a bullish engulfing candle. You had 1, 2, 3. Enter a call right here on the third one, right? Remember, after the third one, there's always a fourth one and a fifth one. So if you entered here at 240, you know, 240-ish, you bought a call for 250. You know, you went in the money by a couple dollars. You know, pushed all the way up to 257. So 1, 2, 3, green candle, you enter there. Bank stocks. I know you had
Why after the third candle, Andre?
because that's how swing trading is. After when you have a third green candle, there's always a fourth and a fifth one that comes after. That's just based on history and how stocks move. We kind of see the same thing in here, you know, with JPM, right? 1, 2, 3. If you don't want to get on this doji, get in on this candle right here. 3 and you 4 and you have 5, right? Same thing. 1, 2, 3, 4, and you get in here. You can take profit here. Same thing here. You can see 1, 2, 3, and you kind of play that method. You'll most likely be profitable all the time. CVNA.
When you're playing that method, are you using a 5-minute chart?
Right there, that was the daily.
Okay.
Yeah, daily.
But I'm saying when you're watching it, are you going to be watching that on a 5-minute chart or?
Yes, I'll watch it on the 5-minute, the 1 hour, and the 15-minute. And sometimes I'll switch it up to the 30 minutes and to kind of get the overall trend, because if the Here's the thing, right? If the 1 minute, the 1 minute candle will show you red, but if the 5 minute candle is showing you green, you're still good. If the 5 minute candle is showing you red, but your 15, your 30 minute, and your 1 hour is showing you green, you're still good because that's showing you in an hour from now, this candle is going to close green, right? That's what it's telling you. The overall trend is still green. So that's why most people, whenever you're trading penny stocks, you want to trade on the 1 minute and the 5 minute. So if the 1 minute is still showing you red, and I showed a bunch of people this on Friday, right? The 1 minute is showing you red, but your 5 minute is still green. And then what happened is that 1 minute candle turned green because the 5 minute was still green. So once the 5 minute is green, do not go ahead and close your position. You can hold your position the whole time. And I should have done that with DWCA, but I'm a day trader. If I buy say 2,000 shares and this thing goes up and give me $1 per share and I'm a $2,000 profit, my instinct is just to sell right away. I'm not gonna hold this thing and say, hey, this is gonna go to $30, $50. Because what I could do is I could buy and I could scalp it all the way up. And I'll show you, let me pull up my other broker really quick and I'll show you what I mean. See if it loads here. Let's take a look at Amazon in the meantime while this one opens up. My dog is going crazy, man. So Amazon, I'm holding a contract for December 17th at 4,000 call, which I think is a really good one. It's not really getting affected right now. And I'll probably buy 2 or 3 more contracts just to hold because I don't see Amazon staying here. Once the market starts, November is always a good month for the market. November, December, market starts pushing up higher and then towards the end of the year. I'm only looking for Amazon to get back up to, 36, 3,700. And then, those contracts are going to go from about 1,000 to, maybe 25 to 3 grand. So I'm just going to hold those. Let's see here. So over here. So I'm going to go ahead and pull up the DWCA. Hold on 1 second, guys. What was it? DCWA? Was it? Or DWCA?
The what? DWAC.
DWAC. Oh my God. Okay, so I'll pull that one up and I'll show
The
you
whack
exactly.
job, man. It's the whack job. It's a Trump saying, no, it's a whack.
Oh my God. Hey, it made you money, all right. What was it?
I'm not gonna complain.
What was it?
To make some more. DWAC, I'm sure of that.
DWAC. All right, let's see if I can pull this chart up. Okay, so DWAC. Can you guys see that chart? Did it change on the screen? Okay, so I guess it removed all of my entry where I entered. So for this one, I entered at 15. Let's see here.
I think it was 11 something.
Yeah. My original entry was around 11, and this is where I sent it out to you guys. I was watching it just to be certain this thing was going to go crazy before I actually told you guys to get in it. So I got in right here around 11 or so, right here when I saw this huge volume candle coming in, right? I got in here and I sold some into here. And then I got in, what was it at? 15 when I sent it out to you guys. Right around here, around 15. And I was like, hey, getting some DWCA right here. I got in here and I sold literally up here into 16. And then I didn't touch it again until it got up to around 20 or so. And then I bought, just a little bit of shares. But you could say, hey, if you would hold this thing from 15 with 2,250 shares, you held it all the way up. You say, oh man, you could have made a ton of money. But what if you hold it right and it doesn't go up? It comes down on you with 2,250 shares, and you're up in here at 15, and it could come back down to 10, right? So now you could lose a lot of money. So that's how I day trade, right? I'm gonna go in and go out, go in and go out, because here's the thing, if you have 2,000 shares right here and it goes up to 50 and you make 100,000, right? If you have enough buying power in your account, you can trade this from 15 up to 30 and make more than that 100,000 that if you held it from 15 to say 65, right? You get $50 per share and make 100,000. If you have enough money in your account and you can scalp this all the way up, you can make more than 100,000 versus holding and have uncertainty if you're going to hold. So you can buy 2,000 shares for every dollar it pops. So you can buy 10,000 shares, because if you can buy 10,000 shares of this thing and it pops up $1, $2, you can make 20,000. You can sell and you're in and you're out and you have no risk, right? Because now when you start holding, even though you're down here at 15, you just don't know where it's going to go. So scalp, that's why I rather just scalp than to hold this kind of stuff all the way up, because you can hold and this thing could halt up, right? It could halt up here. Say you got in at 15 and it halted at 20, because the first halt was 20, and then it opened at 24, right? What if it halted and the NASDAQ decided to say, hey, this stock is going crazy? Because this can happen. When a stock starts going crazy, the NASDAQ can go ahead and halt the stock for news pending material. Material. I don't remember, material something, right? That will happen with a lot of stocks when they start going crazy in the market when there's no news. And once the NASDAQ gets a hold of the company and the company says, hey, we don't know why our stock is going up crazy. When it's at 20 and you got in at 15, I've seen it before plenty of times. The stock can open at 5 when the company tells the NASDAQ that there is no news. They don't know why their stock is going up. And it can open at 5. Now, if you bought at 15 and it opens at 5, you kind of got screwed. And I'll show you a stock that did that, ORPH. Take a look at this daily chart right here. So that's why, I scalp, right? One day it went from $5 up to $77. It got up here into $77 and halted for about an hour, right? Company came back and said, hey, we don't know why our stock is going up. The NASDAQ opened this thing, it halted at 77. And when it opened up, look where it opened up at, $9. So if you bought up in here, when this thing opens up, your account is automatically liquidated by your broker. You don't have a choice. It's going to be liquidated. And you're probably going to end up owing the broker money. If you use margin up here and you don't know what you're doing, you're going to be in a lot of pain. So that's why I scalp and I sell and I sell and I scalp and I sell, because you just don't know what's going to come. Yeah, so that is why I scalp. Let's take a look at, I have a couple more that I want to go over with you guys. I know Carvana, does anyone on Carvana report earnings? I could take a look real quick, but let's see. Because I know this one can move. I know it's a good company for earnings. Wow, SHIB actually pushing back up. You guys seen this? This thing is back up to 3.9 again. Carvana, let's see earnings here, CVNA. I like Carvana because they always, they do really, if you look at the daily chart, this company does really, really well when it comes to earnings. Look at that. Every earning call, it goes all the way up. But I don't think I'm going to play any more earnings ever again. You can see right here, sold off and then recovered all the way up. Really good company to play for earnings. Last earnings, they did really well. We'll switch back to Webull because TradeZero's chart, you could tell, it's not the best chart for charting. It's really, really old school and not the best of graphics. So Carvana will switch over to Webull, CVNA. And Webull is going to show us the earnings on daily chart. So we have, right? So if you look at this stock, whenever earnings, it has earnings right here, gapped all the way up, from about 160 to 220 something, right? Earnings again, right here, next day, it pushed up here from 180, and then just kind of kept going up and kept going up. And then earnings here, you kind of had some, right here, you had earnings run up, from around 268 all the way up to 300. And then, next day market open, you got to go ahead and take your profit because this thing is up from 266 all the way up to 300. So as soon as that 930 bell opens, you better go ahead and sell those contracts because everybody else is going to. And earnings here, they kind of sold off right here, earnings. But after earnings, you can see, this one just keeps going up, keeps going higher and higher and higher. So, you have this. This right here is your one bounce, then your second bounce. So now, if they beat earnings again, it's going to push higher and then come down and bounce. And then eventually you're going to have, starting to form a channel, right here, right? You get a little channel right there, kind of something like that. Then earnings come, it pushes up higher and then it'll bounce back down and forming higher and higher lows, right? Because you can see this low right here is higher than this one. So you're kind of looking for that and then just to push higher. So Carvana, I'm definitely going to watch this one for earnings. So earnings is on November 4th, earnings for Carvana. What one do I want to look at? Let's take a look at Apple. Could take a look at Apple. We haven't played Apple in a while. It's because this one's definitely has a lot of manipulation in it. All of them do, but Apple, we forgot about it. And I think it came back up to 150, right? Let's see here. Yep, it came up to 150, right? And then, sold off back down to 148. You can clearly see the channel on this one. Right here, you have your little channel right where it's bouncing. Your extended line right here. And right below Apple's channel, we have that strong support right here on this 200 EMA. So, as the stock keeps pushing higher, so will the 200 EMA. And then, eventually the 200 EMA is going to be at a higher point. Right now it's at 135.19. So worst case scenario, if Apple breaks this trend right here at 139, then the 200 EMA is your next support. But I don't think that's going to happen anytime soon. We had a red market for a month or 6 weeks or something like that, really red, right? And it never came down below that. So I doubt it's going to anytime soon. But you can see why the market has to come down, why you have to have red days and green days. I know, when you get red days, you lose, you're like, man, but the thing is that if you're not on the right side before that red day comes, you're going to get screwed. Because if you're playing the trend and the market is bullish and you're in calls, and then the next, that Monday comes and the market goes red and, you're stuck in calls, it's kind of like you're screwed at that point because you had calls, right? And then the market is red. So, but, take a look at the chart again. You had this high right here, came down, it traded to the right, pushed higher, came up here, dropped again, came up here, dropped again, came up here. You can see all the time it's pushing higher and higher, right? Because if you look, this high is higher than this high over here. And then right here, you had some support from this high right here, right? Kind of a little bit of support right here. But eventually we broke, above this resistance right here, you would have resistance right here. So you can go ahead and draw your horizontal line right here. You have some resistance. And then, it rode the 10 EMA right here and pushed up towards 157. So the 10 EMA and the 25 EMA rode and pushed up to 157. Now look what happens, right? After it pushed up to 157, this right here is your signal. When you see the 10 EMA starts to cross over the 25 EMA, this is what we call a death cross. So you can go ahead and take puts right here. It's just like penny stocks. When I'm shorting, if I see this right here, the 10 EMA crossing the 25 EMA, then I'll go ahead and I'll take, a short position. But now you kind of see we came down under this 50 EMA, then the 10 EMA and the 25 EMA pushed down, but now look what happens, right? It regained the 10 EMA, the 50 EMA, and the 25 EMA. So now it's holding above these. So all of these are going to act as support now when it starts to come back down. So you have the 10 EMA at about 146.62, and then the 25 EMA at 145.68, and your 50 EMA is at 145.45. So all of those are support. They may not be the strongest support, but they are some support. The stock will bounce off of those EMAs when it comes down. Like you see it did right here on the 25 EMA, it bounced and then pushed back up, right? Right here as well, bounced off the 25 EMA, pushed up. A lot of EMAs, but for Apple, calls above 150. Do not touch any calls until it gets above 150, because you have resistance up there at 150. You can see that line right there going across. You have a lot of resistance at 150. If that's not 150 exactly, but let's draw some lines right here. You have some resistance right in here, resistance in here, and you have resistance right here. So you don't want to take calls before you get above resistance. You want to take calls when you break above resistance, because when you break above resistance, you're going to look for the gaps to fill. Now, if you get above 150, a clean break of 150, that is your gap that you're going to look for to fill. So up to 155 after 150 would be your price target. But you don't have to put your price target all the way up there. You can put your price target right here at 153 into a little bit of resistance, right? The high of this candle right here, go ahead, draw your horizontal line, because that's going to be your next resistance, the high of this candle right here after that 150. So 153, that's good enough, right? If you get calls at a clean break of 150 and it pushes up to 153, you can make a good, 60%, 70% from that $3 move. Another one, UPST. This one, it's really bullish stock, but kind of ran up too fast and way too much. All the way up from around 114 after earnings, right? Somewhere around here, 130, pushed all the way up to 401 in about 2 months. So this one, super, super bullish. I know Upstart is a loan company, a financial company, and they do loans and stuff. And I guess it's supposed to be a really good company, but way too extended. This right here is your channel. You see where we're bouncing, right? So even before you had this bounce right here, you could have drawn your channel once you saw this bounce right here, and just tells you exactly where this is going to come before it bounces off support. So you see exactly where it comes right here. Your line would have been drawn here before all of this happened right here. You know exactly where it's going to come for support. So if you saw it selling off up here, 1, 2, 3, you could have taken some puts, because once you saw this sell off right here, and it came down here, and then here, right here, you kind of run into a double top right here, and there's rejection right here at 370. You take a put, and you broke this 10 EMA right here, and then you see it touches this line right here, you can go ahead and take your profit right there, because now it's going to form some kind of support. But if it breaks this channel line, next support that's going to have is at 25 EMA, which is 326. So this one, we're definitely going to watch this one, because this one could drop really hard, really fast. And then if it doesn't hold any kind of support here and the 25 EMA, it could come all the way down here to this 200 EMA, and then that psychological support at 300. So that is your next support level, all the way down to 300, around 300, 305, right down here. You kind of have this double bottom right here, right at 305-ish. Now I kind of remember some of them because I charted them so many times, so I know exactly where the support is at. So it's at 304, 305 area right there, that double bottom right there. Coin, this one may see a little bit of a sell-off. You may see Mara and those other stocks fall. Well, Bitcoin is back up over 60,000, so it had fallen down to 59,000. I was watching it, and now we're back up to 60. So Bitcoin pushing back up as well. So those may not follow that much. Coin, just a lot of profit taking, right? Remember 1, 2, 3, green candle, take your calls right here. This is where we took calls, right? We had coin calls right up in this area right here at up into 300, right? I think we got in on this candle right here, this fourth candle, and then, pushed up and everybody's made some money on this one right here. But not really much to go over on coins chart. You got this little trend right here on the daily. Right here, you have a starting to form a little channel right here. Once we get up in this area right here, right? So we're right over here. But not the best chart, not the prettiest chart. It may try to form some kind of cup. That's what I'm looking at right here. Right, look for this U right here, kind of push up and then sell off and then form a cup to push up towards that $400 area. I know earnings coming up as well. I guess based on what I'm seeing, they don't really do that well after earnings, right? Right here we saw a sell-off. Revenue of 180 billion, and it sold off. Revenue of 2.23 billion, and it sold off. So definitely could play puts on this one. Looks like it gets rejected hard after earnings. Around 270 down to 240-ish. So definitely keep an eye on that one if there's some cheap puts out there for maybe something like $2. So that coin is kind of expensive to play. It's around there. Another one that I saw on, I think it was Friday or Thursday, BROS, not the best chart, just came on the market too, not too long ago. Chart started to curl up. You have this massive bullish engulfing outside candle right here. So, calls over 70 would be safe for this one to push up higher. RSI is at 70, but you have room. It could push up to 80 or so, and then you can take some profit. Volume is good right here. You see nice volume right there. Right here. Not too bad. You have a little bit of selling right there, but then you have this outside candle of 3.4 million. I think it has a lot more room to run up once you get above that 70. There's no resistance overhead. You can tell this is the daily chart, right? There's no resistance overhead. That's why you saw DCWA or DWCA ran crazy, because it just came on the market. There's no resistance overhead. Netflix, right? Netflix is, one of those stocks that it's very, very, very hard to predict what this one is going to do. Sold off after earnings, and a lot of people are, earnings, it wasn't bad, right? Earnings was not bad. They had the forecast was probably, what saved them, right? Because if you think about it, now they're going to have Squid Games in the next earnings, right? So they may beat earnings, more than they did, right? So you have that support right here, double bottom here, right? You see where it came on this 25 EMA right here, double bottom and 25 EMA. And then you have the support over here from this high right here. Now, if you look at this chart, look at the pattern, right? It came down, curl back up, kind of came down here, curl back up, and you have these two massive bullish engulfing candle on the outside right here. And this thing is definitely looking to push up towards that $700 area. Closed the day at 664.50, barely sold off, right? No one took profit because this one is definitely looking like it wants to go way higher than it is right now. So not much for this one, but no resistance ahead. It's been really, really strong. Nice consolidation after earnings, and basically nothing bad about Netflix right here. You can go ahead and draw your trend line right there, right? And then over here, you may run into some resistance once we start getting at the top of the channel, right about here. That's going to be our channel right there. So if it's hard for you to draw the channel from down here because it looks a little confusing, just go ahead and draw it right here on this line. Then you can go ahead and just extend it down like this, right? And then there you have your channel up there. Instead of you drawing from down here, you may say, oh, where would I put my line? Just start it from here. That gives you your channel. So it has room up towards the top of the channel up here at around 680. And before it starts to come down and then trade sideways to the right and then push higher. So that's how you want to do that one, Netflix. Do I have any questions?
So you would suggest a call on Netflix on Monday?
Yes, call in Netflix. Depends on how, actually, let me see how futures are doing right now. Let's see here. Let's see what the market looks like.
Red.
Is it red?
Well, it was red earlier.
Let's see. I'll check right now. Yeah, it's barely red though. It's what do you call it? What is that? It's pretty much flat. There's really nothing. It's like 0.010%. Only down 35 points and then 4 points and then 12 points. So pretty much neutral. Redbox is about to trade, about to be trading on the market after a SPAC merger. Redbox is coming on the market. Yeah, so Netflix, not much for that one. I can see it going to 700. Tesla, I see that one going to 1,000, but I have to look to see how expensive the calls are on that one. The far out calls. Do I have any more questions? Questions. I gotta go start typing up this watch list then. Actually, let's take a look at ATVI, one last one. ATVI, Activision. Now you see, why I had this one in the watch list. It's really, really, really simple. Right? Options trading, I mean, it can be confusing, you're beginners, it's confusing. But right here is where you want to go ahead and play your options, right here. Once you see this downtrend line breaks and you get a nice, you get some volume coming in, you get to go ahead and take some calls right in this area right here. Right here. That's it. It's really that simple for this one. You just take some calls here in this green candles, breaking out of the downtrend with some volume coming in. And that's all it really takes for you to make money. I don't want to.
They're really cheap too, eh? Those ATVIs, they're like a matter of cents.
Yeah, exactly. Cheap. CLF. I want to take a look at CLF because this one popped up, and look at this. This is what we missed out on CLF. I don't know what happened here, but look at this right here. What kind of news did this have on the 22nd? Look at this volume candle on the daily. Traded 60 million shares of volume on that day. So this one, kind of the same concept. You go ahead, draw your trend line, right there, right? Run your line right there, really, really simple. Then you go ahead and you can see your little triangle you can literally see it right there, right? I'm not gonna draw it perfect. Hold on, let me just draw it perfect. All right, so right here, you got your little triangle right there. Just touch your candles, right? There you go. That's your little triangle right there. Broke out of the triangle with whatever happened on Friday, and calls into this area. It went from 22 bucks, 21 bucks. So once it breaks out of the this downtrend line right here, the resistance you're going to run into is this one right here, this candle right here. All right, so around 21.79, somewhere around there. But this one, you can see you're going to have resistance up here at this candle right here to the left. All these candles to your left are going to be resistances. Some they're going to be stronger than some, because if you look to the left, so if this one you have a resistance right here, right, then it lines up with another candle to the left of it, then that there's going to be stronger resistance there. If you have one here, but it doesn't line up with another candle to the left, then obviously that's going to be weaker resistance. As in this one right here lines up with this one right here, right, with the top of this green candle right here. So that's your resistance right there. So stronger resistance because you have about two or three, actually three candles. So it lines up with this one to your left all the way over here. So you have three candles at the same height. So that's some strong resistance right there. Stronger than this resistance right here where you only have one candle, right? So support and resistance is,
CLF, is that the steel company?
CLF. I think it is a good company. I know a lot of people like it.
No, is it a steel? They deal with like
Yeah,
steel,
yeah.
right?
Yeah, yeah.
Okay, so probably maybe somebody knows something or some inside infrastructure. Somebody
Yeah.
knows something.
Somebody knows
Maybe
something.
jump on board.
We got Macy's right here as well. I was looking at. I think.
CLF had earnings that were great.
Oh, they had earnings. Okay, that makes sense. Good. That's good that they beat earnings. They're really good earnings. Could look for a continuation of that one. Now we're gonna take ahead and look at what is this one? Macy's. I think it was Monica that asked me to look at Macy's. So Macy's, go ahead, draw your horizontal line once you get up here, right? You draw your trend line right here. Go ahead, draw your horizontal line. Right there we have our ascending wedge, right? So now we look for this, Macy's had great earnings last time. Her earnings right here, and we played it for earnings, right? And we played it after earnings, the chart, and we made some money on it. You see, came up. And this one, if you're trading it, man, you want to look at daily. If it's a stock that you're interested, go right here. Draw your line right there. Take some calls right here, and it pushes up there. Same thing, right here. Go ahead. Don't try to bring your line. Don't bring it down under here because this doesn't make sense, right? Don't bring it down here and try to force an entry. Bring it right there, right? Or you could bring it right there to be safe, or even right here, right? Don't do this and bring it down here because now you're trying to force it with these candles right here. So right here would have been perfect. Right here would have been perfect as well. Once you saw this little peak right here, go ahead, draw your trend line coming across, take an entry here. And this is around $23, right? And it pushed up to 28. Kind of the same thing now we're gonna do right here is go ahead, draw a line right there. Now that the candle is giving us, you have to wait for the chart to do its thing. And now we look to play this once we get a candle above this line around 26, but then we have resistance here at 27, 22. So ideal, entry could be around 27, but ideal entry is 22, 25 or 22, 26 once we get above this double top right here. So there's a safe entry, and then there is a more risky entry if you want to play it. So safe entry if you want to take above the double top. That is your safe entry. I have another one as well. I haven't played in a long time. I haven't played the stock in about year or two, eBay. Always kind of revisit what I've played in the past, right? Look at this one right here. You know, beautiful, beautiful chart right here, super bullish. Right. Go ahead again, guys. I'm just trying to show you guys how to chart so you guys know exactly what to do right there. Right. This is really what all that charting is when you're doing options. For penny stocks, a little harder. Right. It's a lot more volatility. Right there, holding that trend, massive green candle up here, you know, pushed up here. Go ahead, again, draw your horizontal line. If it doesn't move and it stays inside of here and then breaks out of the wedge, and then that's it, right? So safe entry above the high at 81.19. It closed Friday at 80.58. So safe entry, 81.20. So cause of 81.20. This one, I would not play a put because it's just, there's no reason for you to play a put. There's nothing bearish about this. So why would you play a put, right? You see this massive green candle, massive volume coming in. There's absolutely no reason why you would play a put. Just because it ran up, don't play a put on it. I've done that in the past and I always learn from my mistakes. But I usually play that if I see like a stock that is up, you know, $20, $30 on the day, then yeah, you could go ahead and take a put. But something like this that moved up $4 or $5 on the day and it's showing no weakness, it's not going to really pull back. So eBay, really, really beautiful chart. Same thing here. You know, this is where you take your entries, right? Right here, right there. Top of that candle, you'll take your entry right there. Same thing here. This one right there. All right, you take an entry right here. All right. Same thing here as well. This is how you trade penny stocks. When you see them running up and down, you know, you take an entry here, you buy in, you sell, and you buy and you sell, you buy and you sell. But you know, it's gonna be a little bit harder if you don't have over 25K to buy and sell all day. Etsy, let's take a look at Etsy, one last one.
Let's see. I was
And I
gonna say
gotta-
Coca-Cola, man.
Etsy?
Coca-Cola, they normally run up like these 3 months coming right into the end of the year.
Yeah,
Yeah, like the seasonal clock tells you that, right? Equity clock.
yeah. All right. So I'm gonna go ahead and stop the recording right now.